Hey everybody, welcome. This is my YouTube series on preparing Canadian personal T1 tax returns. My name is Ian DeNovo and I'm a professional accountant in Toronto and the founder and instructor at CanadianTaxAcademy.com, where I offer some practical real-world training courses in the areas of personal income tax, corporate income tax, and a number of other tax areas. If you're interested in taking some personal tax courses, you can scroll over to the bottom in the description section here at YouTube, and I do offer some promotions, or check out the pop-up bubbles that come on every now and then, and you can take courses at CanadianTaxAcademy.com for a very reasonable price that you'll find is very competitive compared to other options out there in the world of Canadian tax. So, without further ado, let's get on to the training series here. These series of 4 tutorials will teach you how to prepare a basic Canadian T1 tax return. So let's get going. Alright everyone, so let's get started here in the first part of this series here on preparing personal tax returns. So in this particular video, we're going to be looking just at the identification and the personal information portion of the T1 tax return. Now, what you might be thinking is, oh, come on, Ian, isn't that pretty straightforward? It's pretty easy. Why would you spend a whole tutorial on just covering the personal information? Well, to be quite honest with you, you would be surprised at how much can go wrong if you don't enter the proper information into the identification area and all the other personal information areas of the T1 return here. So what I'll do is I won't show you how to fill it in because obviously you know your personal information, but I'll show you the various areas here and what can go wrong if the software or the CRA does not have accurate information. So for the most part, on most software packages, there will be an information worksheet. So this is where you would enter all the information on your tax return, or if you're preparing tax returns for clients, you have to be very careful here. All the information that you do enter onto this information page will be just carried over and put into the T1 general return here on page 1 and part of page 2. So in the identification section, pretty straightforward. This is name, address, and mailing address. Now if you have clients or if you yourself want to sign up for CRA webmail, then you can put in your email address here in this box, which is relatively new here in the tax landscape. All right, let's go to information about your residence. This is very important because the tax software and the CRA will use this information to determine which provincial tax rate to apply to your personal income tax. So if you live in Ontario and you work in Ontario and you never leave Ontario, well, it's pretty straightforward. So you would be a resident of Ontario and the tax software will use the Ontario tax rates and apply all the Ontario tax credits. Now, if you notice here, you will need to put in not only your province of residence on December 31st, but it also asks you if your mailing address is different from where you live. It'll also ask you where you currently reside, if it is not the same as your mailing address. So this is where the CRA gathers some information because there's a lot of trickery or shenanigans maybe of people trying to show that they reside in a province that has a lower tax rate. So Alberta would be the big one here. A lot of people want to show that they're residents of Alberta when in fact they might be a resident of another province. So make sure that you enter that information in properly. Now the last information here in the residence box is if someone or you yourself became or ceased to be resident in Canada. So this is very important because when you enter Canada or when you leave Canada, there are tax implications associated with that, so you do have to enter in the month and the day you either came in or the month and the day you either left Canada. So very important there as well. Now in this portion, we have the information about the person you're doing the taxes for the person you're doing the taxes for, or you yourself. Now the date of birth obviously is very important, language of correspondence. Now if you're preparing tax returns for somebody other than yourself, let's just say you run you're starting to run a little tax business, and let's assume you don't have the date of birth for your client. Well, very important, make sure you actually get that date of birth because a lot of the calculations and a lot of the tax credits in the tax software are based on the age of the client. and the tax software will do all the calculations automatically depending on the age of the client. So don't make the mistake of just leaving it blank and then asking them later. What you should do is at least put in an estimate of what their birthday might be, or just, if you know they're around 40 or 50, then just kind of count backwards and put in the date that you think they are. And the reason is quite simple. As you can see here, if I go into the information page, and if I go to a summary of the tax return here, you'll see this taxpayer owes $305 based on their income. Okay, so what happens, for example, if we didn't have the date of birth for this client? So if I go and I delete the date of birth here, the software will tell us that we do need the date of birth, and it can't be e-filed or filed without that date. So very important, and it's good that it's flagged by the software itself. But now if we go back to the comparative, check it out. This client will get a refund of $1,700 roughly, $1,678. So if you're talking to the client before you have their date of birth in the tax return itself, you will be giving them the wrong information. And without getting into detail here, the reason is this number here, because the software program assumes that there's no date of birth, so that there's no CPP implications for this taxpayer, so it's giving them a refund of the CPP that they paid on their T4 slip, which is absolutely wrong. So that just goes to show you what can happen if you just leave out the date of birth. Okay, next box, relatively simple as well. If you're preparing the tax return for someone who's passed away, you would put in their date of death here, because that is a very important date in preparing tax returns and estates, which I cover quite in depth in my returns for deceased taxpayers and estates tax course over at CanadianTaxAcademy.com. All right, marital status, very, very important. So this is where a lot of people get into trouble with the CRA with things that are not specifically income tax, but other benefits such as the GST, HST credit, if there's any provincial income tax benefits based on combined income of spouses. Very important that you put in the proper marital status. And this is particularly the case when you're living common law. So for example, you might have a couple that's living together, they decide to file their tax return as singles, and then what happens is the CRA gets wind that they live at the same address and they're actually living common law. And then what they do is they kind of reset their tax return and they reset all their credits. So what happens is both people in that relationship will get letters from CRA or notice of reassessments and assessments based on the fact that they were living common law. So if you do have clients or you yourself are in a common law relationship, it's probably best, if you meet the criteria for being a legal common law couple, mark it down as living common law. Same thing applies to being either married or separated. That can have a bearing on a lot of the legal work that goes, that comes into play with, with divorces. If couples are separated, then that's basically like being divorced or single. So again, the tax software and the CRA will base the information on what you put in for the marital status. So very important information there. And finally, if you are married or living in a common law relationship, it's always best to file income tax returns together. And what will happen here is if you actually have a married couple or a couple living common law, then the tax software itself will actually fill in these numbers. And the CRA uses this to determine other benefits, as I said, such as GST, HST, credit. In Ontario, there's the Trillium benefit that they use to calculate. So it's very important. If you file your return separate from your common law partner, or if you're preparing tax returns and you're filing only one of the spouses, try to get this information from the other accountant or from the other spouse. And believe me, it'll save you a lot of problems potentially down the road, because if you do put in the wrong information here, the CRA will use that information and could adjust benefits at some point in the future. So there you go. All right, and finally, quickly here, there's the Elections Canada question. I won't go into detail on that, but if you want to provide information to Elections Canada on your tax return, you can just mark off yes here. And an extremely important question now on the tax return, which has been around for quite a while, but CRA has changed it recently, is whether or not you or the client has foreign property with a cost of more than 100,000 Canadian dollars. And you have to be very careful here, because if you lie or you do it by mistake and the CRA figures out that you've done that, you could find yourself in some deep water. So always mark this properly, and if you do mark it as yes, then you will have to fill out just another form called the T1135, which is just information on foreign holdings. It's important to note here as well that foreign holdings does actually include U.S. stocks or foreign stocks that you hold even in a Canadian brokerage account. So a lot of people have been trapped by that, thinking that TD Waterhouse has my investments, and even though it's I have 200,000 in U.S. dollars, I can put no here because it's not actually foreign property. Well, unfortunately, according to the rules, it is foreign property. All right, so that's it for the first part here. As you can see, something that you think is very simple can throw a lot of curveballs into things. So always make sure that you enter your personal information properly, or if you're preparing tax returns for individuals, make sure you have all that personal information. It's one of the first things that you should ask the client when they come in or when you're speaking to them. That way you can ensure that you're actually preparing the tax return with accurate information. All right, so let's move on. In the next video tutorial here in the playlist, we'll look at the income side of things on a personal tax return, and I'll show you how to enter all your income information using T-slips. That's coming up in the next tutorial.